Hey traders, Raghee here. Welcome to our weekly Raghee report. I can see the questions coming in already. Awesome. Glad to have you here. All right. So, a couple things to kick off this evening. A lot of folks were wondering whether or not we'd see some weakness on the open. Let's take a look at this gap. And bear with me here. Let's take a look at this gap as the market opens. And you'll see this resistance here at the Darvis level. One of the things that I've been talking about for the last few free videos over at the Simpler Trading YouTube channel is, it's not the bottom of the range that we want to be bearish at. It's actually the top of a neutral range. And in many instances, we do not have an uptrend. We have neutral markets that have seen a lot of bullish momentum. And at the upper end of the range, whether it's a price range, volume range, maybe you're using a slow stochastic, maybe you're using a V-score, we're sitting at the top of a lot of resistance like resistance like level ceilings within the context of this range. And that's where I've been hopefully mentioning consistently enough that I'm not expecting an explosion higher. I'm not expecting brand new lows either. I'm just saying we're at an overbought range. And in those instances where we're neutral and forming the price pattern that would indicate we could head lower, we want to look for that. Where aren't we doing that? Maybe that's a really important contrast. So look at the Dow, and I'm going to move this intraday chart aside. Look at the Dow. That's an uptrend. No two ways about it. Then compare that to, say, the NASDAQ. That's a neutral market. So the difference between looking for weakness in an uptrend and looking for weakness in a neutral market is the difference between markets that we expect to have an easier path of resistance to the upside versus a market that's arguably overbought. And that's where watch list building has got to be the main thing that we do as traders, not looking for new secret squiggles, not just putting on trades and finding more complexity within our strategies, but rather, what am I trading and what's the path of least resistance in that symbol? So watch list building is definitely the activity that I would recommend. Most traders spend, 80-20, if the Pareto principle, the 80-20 rule is spot on, which I think it is, most of our time should be spent in watch list building, not trading per se. Now, the only exception to that would be day trading, where we have a fairly fixed set of symbols that we're looking at. We should know what most of those are going to be pre-market. And that's not really an 80-20 type. Well, maybe 80-20 in that we're scanning for setups across that fixed set of symbols. So instead of watch list building the way we would on daily or weekly setups, swing trades, overnight trades, the 80% is spent just cycling through those 6, 7, 8 symbols, looking for opportunities. So sort of scanning that list. And that's kind of what I hope everyone's thinking about on a Sunday night. That, and here we go, the economic calendar, right? So this is where the rest of the story resides. What do we have coming up starting tomorrow? We have Lagarde, we have Bullard, oh, that kind of rhymes, and we have Williams. And those type of hot zones are definitely going to move dollar and euro. So if you get a dollar position, euro position, you're interested in bonds, you're interested in euro dollar, the interest rate, that's going to be a really interesting set of hot zones tomorrow. Going into the remainder of the week, things are pretty quiet. We had a lot of data last week. We have ADP on Wednesday, which means we have ADP, we have JOLTS, we have Powell. Heads up, we've got Powell speaking about the economic outlook, cloudy with a chance of meatballs. On Wednesday, Thursday, Yahtzee. Now we're getting some data. Core PCE, that is the Federal Reserve's pet inflation number. ISM manufacturing, that goes right into the column of inflation. And then, as if that isn't enough, boom, non-farm payroll, December 2. And we're going to take a look at that employment picture. to major events. And I would not even consider Powell's speaking engagement to be one of them. I wouldn't consider Ballard, Lagarde, or Williams part of that either. PCE, NFP, that's going to change the way in which we are expecting our Fed target rate probabilities to line up. And those data points are going to be how the Federal Reserve can or does change their messaging. Two huge hot zones to kick off basically the last month of the year. All right. So with that being said, that's what market prep looks like, right, gang? That's what it looks like. So let's get into the questions. I can see quite a few have come up. So let's go ahead and do that. All right. And by the way, just out of curiosity, we're doing a later start time. Those of you that did let me know, hey, Rog, yeah, 6:30 would be better than 6 for me. Cool. We're going to test this out. So if this is a great time for you, let me know. If it's not such a great time for you, let me know. And if 6:30 is where most folks are saying, yeah, this works for me much better on a Sunday evening, that is what it will remain. All right. So we're trying out this 6:30 start time for size. All right. So first up, Tim, how are you? When looking at volume, do I only use volume profile and not the standard volume bar chart? If so, why? Do I only use volume profile? When you say standard volume bar chart, you mean the histogram? I'm presuming? Yes, to the first question. And because I really don't care if there was more volume on a Tuesday. I really don't care if there's more volume at 2 p.m. What I care is what price is the volume at. And that's why I prefer volume profile. So thanks for the question, Tim. All right, for day trading, do I use the 30-year bond ZB as the main gauge for opening bias on indices? No. Years ago, I used currencies to gauge bias, yen and Comdols. So I am group. I don't know the main bias I'm going to get is for the indices or the indices themselves. I do not want to trade the indices opposite, though, the yield curve, or not yield curve, the yield. I don't want to trade it opposite the direction of the bonds, generally speaking, because equities usually like lower yields, right? So I'll definitely use that as a sentiment read, but the opening bias is the symbol itself, right? And then do I still look at currencies? I do, but the more we got into lower and lower rates and extreme central bank intervention, I still look at yen. Absolutely, we still should look at yen. I think that's a very powerful currency to look at in light of yen being borrowed or sold as a carry, right? There's your carry trade right there as a funding currency. That's important. But when the US dollar takes off and strengthens as it has throughout 2022, especially the early part of 2022, that US dollar strength kind of skews the relationship the dollar has to the other currencies. And those other currencies aren't quite as telling as they would be if we did not have a dollar pretty much earlier this year, especially sort of launching like a rocket ship, right? So bonds are very important for sure, but I'll use the ranges and the direction and the structure of the indices the most. And then, yes, I would like them to not be in the opposite direction of the bonds. And I've got some great videos on that topic at the Simpler Trading YouTube channel, where I believe our last two, you know what? Let me make sure here. The last two videos that I did were my boring day trades, as I like to call them, world's most boring day trader. Nice to meet you. I would check out Fading for the Win. And there you go. Boring day trades right there. Check those out. I think you'll find those very helpful. All right, next up, I've heard it said that the trade starts before you push the button. Of course, that's where the plan happens, right? In a nutshell, how do I prepare for each day and trade? There's no nutshell answer for that, MBC. I wish there were. I think the best way to do it is know what you're going to trade and know the direction you're going to trade it in. Until you have that clarity, there's really nothing to do. And maybe that's the most important distinction. Know what you're going to trade and why and in which direction. And until you can see that confirmation and then the setup that lines up with that process happen, th- probably the most important thing in trading is doing nothing, right? Always looking for a reason not to take the trade than to take the trade, right? Okay, next up, can I cover my allowable day trading windows other than the US Open and the US close? You mean my other day trading windows, Dean? My favorite is the US, the 9:30 to 11:30, which has really been shortened to 9:30 to 10:35 Eastern. My second favorite is pre-market, and might be the my third favorite might be a very specific hour within the afternoon session, which is the first hour of the afternoon trading session. And I mean, Asian session's fine. My least favorite allowable would be the last hour of the day. So say 3 to 4 Eastern. That's probably my least favorite. And then my most favorite is the first hour of the day, say 9:30 to 10:35. But there are a number of other windows. I think the most important thing with those other windows is to make sure you know the volatility, that we are well versed in the volatility in the S&P or the Nasdaq or crude oil or the 6E for those particular windows, because the volatility is extremely different, say, for example, from 8 to 11 a.m. Eastern compared to 8 to 11 p.m. Eastern, right? You would think, oh, well, how different can they be? I mean, sometimes roughly half the volatility. And if I am using expectations from, say, the active US trading hours, and I'm superimposing those on the Asian session, I'm going to be really disappointed in the way in which the Asian session moves as compared to the US session. So each hour of the day and each sort of financial center overlap does have its own volatility. And then there's a couple windows to avoid, and that's those lulls between financial centers. That's probably, again, kind of going back to knowing when not to do something. Knowing times to avoid is probably as important, right? So at least you're giving yourself the best shot. All right, next up, good evening. Hey there, Coopzilla. I'm looking to sell a weekly expiration out of the money call on SPX. Thoughts on selling calls this week? Coopzilla, I'll be straight up. I don't do it. That's not my out of the money. I don't play the SPX, and I don't look at it in terms of this week. So not that that's not a great idea, maybe, but I think you know what's really important for someone on this side of the mic and camera is to be straight up and say, I'm not going to put a trade on like that. So I could sort of cobble something together, but it's not a trade that I would even consider putting on. So I would say, Coopzilla, I'm only going to pass on that question only because I don't put trades like that on. So I feel it's really irresponsible for me to even attempt to walk you through that, especially if I don't intend on putting my money behind the idea, right? So I hope you understand. But yeah, I rarely play SPX. I know SPX is very trendy right now. Everyone's trading SPX. Realize the SPX has been around for a long, long time. Just a very trendy symbol right now. And then the daily expirations made it very sexy. And with that in mind, remember that whether you trade S&P futures, mini, micro, options on the mini, SPY, SPY calls or puts. There's a lot of ways to play S&P. It just seems that SPX right now is everyone's favorite. That's cool. It's just not something that I tend to want to trade. I like the futures, and I love the futures for traders who are comfortable with the awesome leverage that the ES or the MES provide. And if I'm not going to go that route, or a trader's not comfortable with the leverage and the volatility and the cost of futures, that's where SPY options on that are a really good choice. So just a personal opinion, and so that's usually what I will tell folks when it comes to SPX. Not that we don't have tools for it, right? I mean, I realize they are very popular, and a lot of folks want to know what the HPMRs for them are, or what the structure is. So, I mean, obviously, my tools will work on it, but I usually recommend if you want to trade SPX, your trade should be built on the ES. Consider what the ES is doing, and then what your analysis would tell you want to do on ES. If you're looking for a pullback, as I am, then, ask yourself, all right, if I see the same range Raghee is seeing, and it's overbought on my range too, what would be my target? There's your out of the money strike. All right. All right. Next up, Trader Momo. Not a fan of the new time. Um, okay. Well, good to know. All right. Yeah, speak up, gang. Um, I'm open to. I'm either going to go 6 or 6:30. So speak now or forever hold your peace. A lot of folks spoke up for 6:30 last week. So we'll take a look at how the right now. I will say we probably have more folks tuned in for our 6:30 show. So right now it's looking pretty good for you folks that are liking this later start time. All right, next up, CNH. CNH is getting killed by the dollar. Let's go take a look at the dollar. Dollar strength is back because both the dollar and the euro are at opposite ends of their range. However, be careful, gang, because the euro has turned into an uptrend, the dollar has turned into a downtrend, and unless Powell opens up some crazy can of worms, which he's usually pretty disciplined not to, but unless here's what I would say. Unless PCE is very hot, that's going to be very bullish for the dollar, bearish for the euro. And unless non-farm payrolls are really weak, that would be also bearish for the dollar. Unless those two things happen, I don't think we're going to see a lot of change in what's happening with the dollar and the euro. And that change is not that we're in chop anymore. Euro's in an uptrend, dollar's in a downtrend, but here's where it's kind of tricky. Both are at sort of inflection points. The euro's at a arguably overbought level and the dollar's at an arguably oversold level. So we'll keep an eye on the way in which PCE, Powell, and the non-farm payroll affect our expectations for target rate probabilities. In other words, where is the Federal Reserve taking rates? And then we'll see what the trends are doing. What do they pull back and offer a buy in the euro, short on the dollar, or do we go back into a neutral chop? They're looking like they're going to stay with trends, though. By the way, all right. Next up is copper. All right, let's take a look. Look, if equities are super strong, especially the Dow, I would treat copper as trying to become oversold. But I got to tell you, Mr. Walker, I don't love it. I don't love it. I think there could be better levels from which I could buy. I like Freeport McMoran better. So if you want to play copper, HG futures, but you want something similar to a copper, what I think would be really a copper buy, take a look at FCG, take a look at other stocks within the XME, maybe even the SLX. And much like I'm not advocating a lot of crude oil trading right now, although we might be looking at a buy this week. Yeah, we might be looking at a buy this week. I actually like crude oil stocks and some natty gas stocks over the commodities. And that might be the same with copper and going with relative outperformers in SLX and in XME. All right. So keep an eye on those, Mr. Walker. Not super fond of what's going on with copper futures. Yeah. Got an itch on my back. Oh, wait. Oh, these things are lifesavers. Oh, all right. Live shows. All right. I think I got bit by a mosquito. What's it all saying? If you think something small can't affect your life, get stuck in a room with a mosquito. That's life in Florida. All right. Next up, what is your brokerage of choice for trading Forex futures? Forex, I'll tell you what I have. Alanda is mostly what I'm doing with Forex. Do I have another Forex account? I haven't been doing as much Forex, but Alanda is one of them. I still might have a Forex.com account, but I use Alanda the most. And futures. So you can swing trade, overnight trade futures on Toss. You can swing trade overnight on TradeStation. You can day trade on TradeStation. Infinity has been mostly what I've been using for day trading. And I'm probably going to try, what's it called? Tradeovate. maybe this year or next year. So as far as futures go, I think the biggest difference, Frank, is whether you want to overnight trade futures and futures options, whether you want to day trade futures and futures options. And I think that some brokers are far better for day trading by way of margins and their platform, and some platforms are better for the swing, the slower style. And so I would say, yeah, Infinity is pretty good. I've heard good things about Trade TradeStation's good for day trading. Yeah, those are solid. All right. So G, I think I answered that question when I answered Mr. Walker's question. So yeah, I'm fine with that. Apparently we got some spammy trolls on my channel. Ay. All right, gotta fix that. Okay. Next up is, yeah, gang. I'm happy for everyone to give their 2 cents. I wouldn't ask. I just don't know which way we're gonna go, right? So we'll see what happens. I'll check out the views too. But yeah, already 6:30 seems to be a hit. So let's see. Where can I get the PMRs, HPMR indicator? 2 ways to do that, Mark, is one, if you're a member in the Sector Secrets Mastery or the Simpler Futures Room, I give a small free pack of the indices. So I have a 4-symbol pack, S&P, NASDAQ, Dow, Russell, futures in the futures room. And then in my Sector Secrets Mastery, it's an 8-symbol pack of those same 4 indices and their ETF alternatives, so SPY, DIA, IWM, QQQ. And then those are the free ways. And then the other way is the premium route, which has upward of 70 symbols, I think, now. And they cover treasuries, energies, currencies, indices, ETFs, and a large number of stocks. So upward of 70 symbols now. That's the premium version, which I think you can still pick that up at 30% off. So that is an ongoing subscription because those HPMR levels are already 77, says the bot. 77. There you go. So those are still 30% off. So if you haven't grabbed them yet, I'm letting you know now. They are on sale. And if you do want to grab that subscription, was it 30% off? Whatever it may be. Yep. Now until November 27. What's today? Oh, so Cyber Monday. Yeah, through Cyber Monday. All right, Mark, thanks for the question. Do I use a VWAP before the trade? 2 braids, I like to know whether price action's above or below it. Sure, yeah, I do pay attention to it. Is it always going to be in play in terms of an entry decision? No, but it's usually going to be in play even in a secondary way to bias, to sentiment. I mean, which way would I rather be, long or short? So I hope that makes sense. Next up, where do I think crude is heading? Short, medium, and long term? Well, short's a day trade, so I can't answer that now, my friend. I mean, well, no, that's not true. I could answer that now. If you want to trade it now, short term to me is now, right? Day trading wise, it's a short sell on a rip, 5-minute chart. And again, short, medium, and long could mean so many things to different people. So that's a tough one. For me, short is 5-minute, medium, I guess, then could be daily, and long would be weekly. Those are the 3 time frames that I use. Medium, if you will, daily time frame, I'm looking for a pattern to get long, actually, oversold long. And on the weekly, same thing, oversold long. I'd be looking to be a buyer on the daily or the weekly. All right. Okay. Next up, when I place a swing trade with options, how do I determine which expiration to use? What do I factor into the selection? Edwards, how do I determine which expiration? Trend will be a factor versus chop. I'd rather have more time than not. If it's a trend, I'd rather edge in the longer end of my window, which is usually 45 to 60 days. I don't mind going above that if there's a nice trend, and there's a macro trend also powering it. And then if it's chop or I can't find liquidity, I mean, a lot of expiration is going to be, where's the liquidity at, right? Where's the liquidity at? So those are things that I'll factor in. All right, how do I determine my price target when exiting a day trade? It depends on the setup. Yeah, it depends on the setup. All right. There's different targets for different setups. And when I'm day trading, I have 5 different pitches, if you will, 5 different types of setups I'm looking to. Uh, I look at it as a baseball game. It's a pitch, and is it across the plate in the way that I want it? And it depends on the setup. Yeah. All right. I think this time is great. I appreciate that. D Shore. Yep. Okay. Euro US dollar pair on my daily time frame is trying to breach. All right. So let's take a look at that Euro US. So if you're looking at the 6E and you're wondering, okay, what does Euro US look like? It's going to look a lot like the 6E, but the largest market of any market is this one right here, is the euro versus US dollar. The way we would trade that if you're not a Forex trader is the 6E. There's a micro 6, there's a micro euro as well. And you could trade FXE if there's liquidity. If you want to trade options, you can trade FXE as well. Yeah, I like the way in which the 6E is moving. Right now, I think there might be a near-term pullback, but longer term, meaning not just the next few days, but maybe the next few weeks. I have a feeling that we might start buying the dip. If, look, I say we have a feeling. My feeling, my opinion is emanating from that green. So when I kind of think ahead, I imagine ahead at what's next. If we stay double green, I'm going to be buying the dip. All right. Okay, next up is, let's see, call me the mega fan. All right, like button. I appreciate that, Mr. Walker. I appreciate that. All right, next up, Manish asked, is the Momo trend indicator that's on the top panel drawing those green and red arrows? Do they repaint? No, those are not drawing those arrows. That is part of the Darvis 3.0. And like any indicator, gang, any indicator is looking for a certain criteria, which is what that's looking for. It's looking for a certain pattern. That is not a signal to get in or out. It's just a signal that a certain pattern is developing. So since it's just studying a pattern, it's a 3-candle pattern, since it's just studying and looking for the pattern, yes, it will repaint. The setup based on that pattern is valid once that arrow stays lit. So it's designed to, of course, repaint if we lose the validity, right? But once it's there, once it's set, once that candle closes, no, it's not going to repaint. In terms of, does that one repaint, bot? Actually, that one, well, let me put it this way. If I make a higher high, it will repaint. Yes, if I make a higher high, it will repaint. But then the pattern never did fire. So I know it's a little confusing, but the simple answer is no on the green, on the arrows. And it's looking for a pattern. So if the pattern doesn't form, I don't get in. But if the pattern looks like it's forming, the arrow will turn on. So it's an alert for the pattern, which I probably didn't do a really good job describing that. But it's the Darvis 3.0 indicator, which many of you know we've dedicated classes to, because obviously it's kind of hard to answer that question quickly without really getting into the strategy. All right. Let's see. Next up is, I guess, a follow-up to that. The Momo trend indicator that's on the top panel. Are they based on swings? No. They're based on a pattern. They're based on a pattern. And do they generate after the 2, 3, 5 bar real time drawn immediately? As the pattern is forming, they will draw, right? As the pattern is forming, they will draw. But until the pattern is complete, they can disappear if we lose validity. So these questions are coming up from a standpoint of, do I sell that arrow? I'm not selling the arrow. I'm not buying the arrow. So the fact that it repaints is not problematic because it's a heads up for a pattern. We trade the pattern, right? That's the differentiation. So I hope that answers the question. I appreciate that, Maria. Thank you. I'm finally in control of my trading and making money. 6:30 is my vote. Maria, awesome. Thank you for the vote, and awesome. Congratulations for turning the corner, and kudos for all your hard work and study. Excellent. All right. Let's see. When will I be trading 1-minute charts again? Probably not until we get another rip-roaring rally like we did back in 2020. But I prefer 2-minute to 1, and I prefer 5-minute to 2. I don't mind to slow things down. Yeah. All right. So let's see. Last question. Time's up. So last question here is, I haven't heard much chatter about a Santa rally this year. It's a little too early, John. It's a little too early. And it might be a little bit, not only too early, but there might be bigger narratives that are sort of eclipsing it, right? Especially when we're in the middle of monetary policy shifts and so much impactful data while Fed members are speaking about where they're taking rates. So it's probably not a matter of two things. There's other more important things that we're interested in talking about. And the other thing is, it's probably a bit too early. Santa rally technically is quite a late December conversation, not an early December conversation. But Santa rally is also part of window dressing, a lot of things that are bullish tendencies in this last month of the year. Okay, gang, I hope you all are doing great. Thank you, as always, for being a part of our shows, whether it's Charts and Coffee or the Sunday Raghee Report. I'll see you tomorrow morning, 9 a.m., as usual. And if you want to leave in the comments any questions or requests for start time, like I said, I'm going between 6 and 6:30, but it's looking like 6:30's still in the lead by way of attendance. So thank you, everyone, for being here. Be good to each other. I'll see you tomorrow.